Hi, welcome you all to another technical analysis session with Vijay Karnam. In this session, we shall review Nifty Spot with data availability up to 28th of April. The last time we reviewed Nifty Spot was on 16th April. Let's review a few other indices that are performing well and which are supporting the Nifty's move. The first and foremost is the CNX Bank. As you can see here, it is in a very good momentum. It always took support at 21 DMA and it has been moving well with average volumes. However, in the last 3 trading sessions, you can see the volumes are high to ultra high and the spreads are narrow, which indicates some heavy selling coming in at these levels. Similarly, the case with Nifty Mid Cap 50. Even this also has taken support at 21 DMA and has a very good momentum, and in the last week also it has progressed well. However, like Bank Nifty, the last 3 days it has some high volumes which indicates that higher supply is coming in. Now let's move on to the other indices. This is a PSU Bank index on a weekly chart. So here also you can see that this is also going up with some good momentum, and this is LIX 15, which is nothing but 15 highly liquid stock index. Only here you can see below average volumes on the up move. We can say the Bank Nifty and the Mid Cap 50 must be tiring a little bit other Indian indices which are not performing well. What are not performing well mainly are the pharma and the IT. As you can see here, this is a daily chart for pharma and this is a weekly chart for pharma. As you can see here, it is at a very good support now. This red zone is a good support, and on the last trading session we have seen some average volumes and a doji was formed. So the sellers were matching the buyers, and as we can see here, there is a good absorption of supply. So similarly the case with the IT also. The IT also is near a strong support zone, as you can see here. Though the spreads are slightly higher, but the supply is getting smaller and smaller, as you can see from the arrow here. So the supply is reducing, but only due to the lack of demand, the spreads are higher. But this anomaly is likely to be corrected if the supply dries up. So it is not advisable in the coming few days to short the pharma stocks or the IT stocks. Now let's move on to the Nifty, and this is a weekly chart. It has got a good momentum, and when it comes to the volumes also, the volumes also just average to above average, and as you can see here from absolute strength index, it is almost close to 30. Here, as per my settings, it is plus 50 to minus 50, and we are in a good zone. Now checking the volume spread analysis, the last week's move indicates strength. Also, this is a long-term weekly chart which is in log scale. So in a log scale, we have drawn a channel, and as you can see here, this top line is maximum reactionary line, and the latest price is almost 150 to 2 points away from the channel. So still there is some upside. The Nifty Spot has formed very mild divergences with both RSI and MACD, as you can see here. So concluding the study of the weekly charts, the first point is that we don't have any weakness. The second one is that we have another 150 to 200 points leeway in order to hit a resistance, and that resistance is the top of the multi-reaction long-term line of the channel that you have already seen. And thirdly, the RSI and MACD indicates mild bearish divergence which can be neglected, and the prices are above all the DMAs. So from the trend point of view, it is in a good uptrend. However, from bearish divergences point of view, bearish divergences have formed both in stochastic oscillator as well as in RSI. As you can see from different channel colors here, the momentum has been almost flattening out. And also, the volumes are generally the fuel for any good momentum. As you can see here, from 7900 levels to 8600 levels, the net volumes were always going up. The peaks were always going up. However, from 8600, the net volumes are reducing. So the volumes are reducing in the up move, which is not a very good sign. And this is the reason why the momentum has slowed down. Now, going by the Bollinger Band, similar to the weekly chart, here the Nifty Spot has touched the top of the Bollinger Band and is still above 21 DMA and is in a good uptrend. As you can see here, as the price is moving up, even the volumes are also moving up. However, the volumes, most of the volumes are below average. The last time we have reviewed was at this point, and when we reviewed the chart up to this point, we assumed that the Nifty is going to be mildly bearish going forward. So as per the study, the next week it was mildly bearish, and weekly close was lesser than when we reviewed. This move up from around 9100 does lack the inherent strength. So from the volume spread analysis, my inference is that in the coming week there will be a tussle between the supply and the demand, and in all probability the Nifty will be sideways within a range. However, going by the Friday candlestick, we may have a mildly up close on Monday. You may note down the GAN levels also. The GAN resistance of 9361 has offered a good resistance because on 2 days consecutively it touched 9367 and retreated. So effectively we have a tweezer top, and after the tweezer top we can see a down move. So going forward, 9409 is a very important GAN resistance. Now in this chart I have indicated three different zones which may offer good support. So this is a gap support, this is a demand zone, and the again third one is also a gap support. So I am assuming in the next week that this blue trend line, which is a maximum reaction line, will offer support, and if this is breached, then it will come into the next white zone. Now the next chart is a harmonics chart where we have a ABCD extension. So in all probability the Nifty may probe 1.27 AB is equal to CD, which is this particular line, and whose level is 9399. And only if this zone is crossed, again the next target will be 9487 as per the harmonic chart. If there is a reversal due to this pattern, then it may probe this point B, which is nothing but 9275. So concluding the study, we can conclude that the Nifty Spot is in a distribution phase. Of the last 19 trading sessions, Nifty Spot traded with less than average volumes for 18 trading days, which clearly indicates the lack of conviction in its moves. Also, the volumes needs to increase in case the Nifty Spot has to break out of 9200 to 9400 range. The VSI indicates sideways moves in the next few trading sessions. Friday's move indicates diminishing supply or lack of demand, which may make Tuesday another listless day, provided there are no global or domestic triggers. However, the bearish divergences that are formed are mild and can be ignored currently. However, there is a huge effort that is required from bulls to cross the 9395 to 94110 zone, which I consider it important from Fib projection levels and harmonic levels as well as the GAN resistance level. If that zone is crossed, there is every likelihood of Nifty Spot probing 9465. Then on the downside, if the Nifty has to cross 9275 to 9225, then there has to be spikes or huge gap downs in order to breach that support. So in all, I am expecting a 200-point weekly range for the next week. Long-term and medium-term investors with perspective of more than 6 months need not fear these whipsaws and use all dips to buy frontline stocks. Thank you.